Hello, everyone. Welcome back to the Rational Investors Daily Recap of the Daily Brief. Yeah, I'm getting better and better at those lead-ins every time I do this. All right, so this is our quick 10-minute summary. We'll try and get better, and thank you for the comments on the YouTube page. You guys can see I'm trying here, so that's good. You know, I love our dashboard because as I was sort of talking about in the daily brief, it had been sort of flashing warning signs that maybe the market isn't really as happy as what the sort of headlines and what the major big indexes are showing. You can see the breadth has been slowly working away. I don't think I talked too much to the public about things like breadth and new highs, new lows, advanced decline line, VIX index. I think I did that maybe a couple of shows ago very quickly for you guys. But the long and short of it here is the broader market really isn't that happy here. So everybody be careful about getting too bullish about the broader market. Yeah, maybe they take the individual index stocks like Dow and S&P to new highs. But things like the Russell 2000 and a lot of small cap stocks are just not participating in this bull. Heading on to our summary sheet, where is it? Here it is. We have this really big fundamental event coming up here at the end of the month, FOMC meeting. It's anticipated that the Fed's finally going to sort of abandon their rate hiking program. But I don't know. Color me skeptical. When I look at, and today we have a weekly chart of the US dollar index here, I don't see a breakdown here on this weekly chart yet. I sort of have been cautioning, and we talked in the daily brief, of course, about don't get sucked into believing too much ahead of this fundamental event window. We have to let it pass. We have to hear what the sort of rhetoric out of the Fed is. What are they thinking? Is this just sort of a one and done kind of thing? Cheeky little gaps at the bottom end of this range. We could still see some play into this event, and just go slowly here. Let's not put a fork in the US dollar right now. If anything, what we really need to do is just be really calm, cool, and collected through this. Which takes me to the next market that I wanted to talk to you guys about, and this is the gold market off of the weekly chart as well. And notice A, B, C, D, think bots, right? All that kind of stuff. Notice how we came up into this level here just overnight. And I'm a little worried because what I think happened there is that this market's being played really hard. We sort of reviewed algo signals and all that kind of talk in the daily brief this morning. And what I noticed is they painted a cute little double top in here. And, there is that AB equals CD on the bot trade. I mean, it was just a sick setup. And you can see, boom, 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 boom. They paint a little top, get all the bears thinking, okay, this is it, time to short, right? And it didn't break. And I was talking recently about trading ranges here. And then all of a sudden, they just pop it up top, hit that bot objective level, AB equals CDs. And because of all these stops up here, there's a wicked liquidity pool here. And right into that bot level, they got all their fills. Ding, 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 ding. And notice the price is just coming off like a rock here right now. Now, obviously, this isn't a sell signal unto itself. This is AB equals CD. This is a harmonic, which means that technically it is a potential reversal zone, PRZ. Notice also, too, once we hit that level, there is not that many buyers up here. So, kind of the same sort of talk about the US dollar heading into the FOMC event. Color me skeptical about all of this. If anything, I think we actually hit a profit objective just as everybody in the public is getting just ridiculously bullish of gold. This looks very dangerous to me here. To that end, my recent sort of commentary has been, I'm willing to trade this move. And as long as we're heading into the FOMC event, if you have setups that sort of play into that sort of narrative of, oh man, lots of FUs, they're trying to suck everybody into just thinking the US dollar is going to collapse when maybe that's a trap. One way that I've been playing this is through my North American Palladium, which is a stock that Palladium itself, 90% of the market is controlled by Russia. These guys have North American mines, which makes them extremely high demand when Russia is up to its games. But the way that I've been sort of suggesting, and you've seen, if you watch these daily brief recaps, you've heard me talk about this bullish bot setup. And notice 66%, this is sort of our official level where we can start locking in stops. So if anything, locking in profits. So if anything, had you taken this trade, because the 50% level of the move was hit, your stop at worst case scenario should be at scratch. Now that we've hit the 66 level, on any kind of market structure, you can now start moving your stops up and locking in profits, which often happens with these bots. It's one of the reasons why I really like using this trade setup is you can actually start relieving anxiety about being in trades, move stop to scratch, now start locking in profits very quickly using this setup. That's why I absolutely love it. And for whatever it's worth, this is the setup that when I traded it as a prop trader, it got me funded with the firm. And it just produced ridiculously profitable results. So anyway, long and short of it here, we've hit the move stop to trailing level. You can see now there's a bit of a tail here. If we consolidate at all, my hunch is the stop should be moved up against today's low. We'll see how it goes. And you'll see me report in future daily brief recaps how this trade played out. In the daily brief, of course, we're constantly mining our community. 1 + 1 = 3. Are there any ideas that are catching anybody's attention on the market? And this one jumped out. Thank you, Daniel, monster trader. I went on and on in the call today about how in love I am with Daniel and his trading. I mean, he's just an absolute role model for everybody. Learn the material, manage your behavior, trade your setups, and he just is killing the market. But anyway, this was an idea that he came up with here recently. We actually had a bunch of people, I think they traded this W here, and one person on the site was like, well, I've already got a free position because I traded this setup, and boom, there's a double. So, it's just a great testament to hunt those W's, hunt those reload zones, and get paid when the market gives you the opportunity. And lo and behold, we totally crapped out here. And we've now formed a new W, right? If we change this to like a line chart, hopefully you can see down, up, down. Look at this, down, up, down, breakout, right? Up, back, pull back, breakout. I mean, just the most beautiful breakouts here. So this is an idea on TRI. We're doing things like reload zones. And we're working bids down in these areas to start accumulating stock here. And of course, I think you might have just seen very quickly, I had on the screen, there's no wrong way to read this line. I'm not going to tell you how to read this line, but when I look at a chart like this, and I look at the amount of shares out, and I look at how much the insiders are long, I read opportunity is now here. But remember, this is an open marketplace. Everybody has their own perspective. Moving on, I'm getting lots of bleeps in my ear. It sounds to me like we need to keep moving this bus forward. So gave you a nice little idea. Do your own due diligence. I'm not pounding the table. Follow your plan. If this name appeals to you, find your 3 reasons to act. So be it. Not financial advice. This is an idea that I am very interested in working my own personal money. All right, let's move on to crypto now. A couple conversations. This story itself hasn't changed a heck of a lot since sort of like yesterday's conversation. Put out lots and lots of tweets that Bitcoin right now is at a huge inflection point here. What's really interesting off of this daily chart, hopefully everybody can see this beautiful fractal. And we often call this like an inverted empire formation. And interestingly enough, if we do like fibs off of this range, I think you'll notice that this happens to be a 38.2. Yep, there's 38.2 off of there. And if we even go off of the old highs, there's 38.2 right there. So this is the clothesline breakdown level I talked to you guys about yesterday. And if we change that to a line, right there it is. I said yesterday that this was going to be a massive war that's going on right here. Now, if that fractal does confirm, then I think we got a pretty good shot at rallying back up top here, right? Candle bodies as trade location, all that kind of fun conversation. And if I'm not mistaken, we throw on reload zones on here. You'll notice that, gee whiz, that trend line tag is basically right at that reload zone. Now, because this is a big fat M, there's going to be lots of institutional people that are like, I want to get short off of the middle of that M. And so that's why we're having this war right here. I don't know how the war is going to resolve, but long and short of it here, if this fractal confirms, and I was putting out tweets earlier today, and the irony of it all, of course, is the public is not really that interested right now. But this, in my opinion, is a hugely significant level here. This is going, whoever wins this, if we lose this and dump and make new lows, I think you put a fork in the Bitcoin rally, it's over. If we confirm back above that fractal, you can see it on the lower time frames, it's a head and shoulders. That's what fractals look like on lower time frames. Then I think we're back into that range conversation, and we're talking reload zones. So really, really important battle level here on Bitcoin right now. Last market that we'll sort of talk about here today is kind of a derivative of crypto. It is the total market cap minus Bitcoin, excluding Bitcoin. So this is a conversation about the shit coins. And of course, and now YouTube's going to flag me for swearing there. But, you know, we were putting out fun tweets. You know, now the U.S. Congress is even using the term shitcoin. So if the politicians can use it in open testimony, then I'm allowed to use it. YouTube shouldn't bleep me out. But gee whiz, sure remember the good old days of this guy. He was hilarious. I always completely butcher his name. So I'm not going to say your name, sir. But, I mean, go on the Twitter feed and get this. This is such a great video. I mean, just an awesome video. So anyway, long and short of it here, what are the alt-shalt coins, if you will, altcoins? Well, you know, clearly you can see we have this massive bearish divergence that was confirmed in price as we were making new highs. Bad sign. Sure enough, we M'd out, we broke down. Interesting, off of this entire range, we came down, hit Mountain Man. Remember Mountain Man, he's going to blindly take that trade, boom, right? He's going to sell a little bit of his position, stop at scratch on remaining, and see what happens. So right now he's sitting on a little bit of a profit, and he's got his stop at scratch. If this thing craps out, then he's just going to walk away at scratch. Now, I look at this chart with the bearish divergence confirmed, and we just made a new low. There's no reason for me to be bullish here whatsoever. I look at the profile, and what I see is we accepted back into value, so 80% of the time we should come down and tag value low. And notice there's a big hole in the profile right here too. Also notice too that that's a 78.6 fib. Also notice 3, that is the original market structure breakout. And, you know, Alex, my cohort who's helping me do these, he actually did just a fantastic presentation in the daily brief here today. And we concluded that if you were going to watch for a level, this tail right here is, in my opinion, the level. This is basically where people place short bets against a test of these highs. And those people that are still short, they're trapped. You know, you notice the market came down to this level and it never released them. Notice also, too, there's a cheeky little gap all the way down here. So if this thing really falls out of bed, we could come down here. But I think, and this is just Brian's opinion, previous market structure breakout levels, this cheeky little tail with all of these trapped bears in here who would love nothing more than to get released, that's the level you need to watch. And, of course, notice there's good old 78.6. And as we said just a few seconds ago, that also, oh, come on, you. That also was the bottom of value and what we call a MUOC on the site. So put it all together, nothing to get really too bullish about here. Still working its way lower. We'd actually like to see some bullish divergence here in MACD. Good to see that Willie is now officially stupid. So that tells me it's too late to be a seller. And we're probably closer to a bottom than a top. But this is probably going to take, like, look how long this took to develop. This is probably going to take a few months to actually turn the corner. Okay, guys, have yourselves a great day. All the best, and bye for now.